With just one click, you can now automatically find the best chart patterns, which will help you save time and find patterns you otherwise would have missed, but most importantly, improve your trade accuracy. Before we continue, please hit the like button as it allows for our team to continue to produce more free content on YouTube. Let's first cover all the best chart patterns to actually look for and how to use them after they are identified. Starting with the symmetrical triangle pattern. This is the Tesla stock. You have two symmetrical converging trend lines connecting the high and low reversal points. Once price breaks above the pattern and forms the higher high, this would signal a possible move upwards. Traders will enter long on the break or enter on the pullback to the top side of the pattern. If price breaks below, this would signal a move to the downside. The ascending triangle pattern. This is the Micron Technology stock. You have a horizontal resistance level above connecting the high points and an upward sloping trend line below connecting the low points. Once price breaks above the pattern and forms the higher high, this would signal a possible move upwards. Traders will either enter long on the break or on the pullback to the top side of the pattern. If price breaks below, this could signal a move to the downside. The descending triangle pattern. This is the ARC Autonomous Technology and Robotics ETF. You have a horizontal support level below connecting the low points and a downward sloping trend line above connecting the high points. Once price breaks above the pattern and forms the higher high, this would signal a possible move upwards. Traders will either enter long on the break or on the pullback to the top side of the pattern. If price breaks below, this could signal a move to the downside. The rising wedge pattern. This is the Tesla stock again. You have two converging trend lines that are slanted upwards, connecting the high and low points. The break above with the higher high signals a possible move upwards. Enter long on the break or through a pullback to the top side of the pattern. If price breaks below, this could signal a move to the downside. The falling wedge pattern. This is the Robinhood stock. You have two converging trend lines that are slanted downwards, connecting the high and low points. The break above with the higher high signals a possible move upwards. Enter long on the break or through a pullback to the top side of the pattern. If price breaks below, this could signal a move to the downside. The bullish flag pattern. You have a moving uptrend, followed by two parallel downwards sloping trend lines, connecting the high and low points. The break above the pattern signals a possible trend continuation upwards. The bearish flag pattern. You have a moving downtrend, followed by two parallel upwards sloping trend lines, connecting the high and low points. A break below signals a possible trend continuation downwards. The horizontal flag pattern. You have a moving uptrend, followed by two parallel horizontal support and resistance levels connecting the high and low points. If price broke above, you would take a long trade or wait for a pullback to the top side of the pattern. If price breaks below, you would either take a short trade at the break or wait for a pullback to the bottom side of the pattern. This short trade here was picture perfect through a long wick candle reacting to the bottom side of the pattern, followed by a candle color change from green to red. The double bottom pattern. You have a downtrend, followed by two same lows, creating the double bottom pattern. This shows price failed to make a lower low, shows a loss of momentum from sellers, and signals a possible reversal of price from bearish to bullish. This reversal point here gives you your neckline, and once price breaks above the neckline with a higher high, traders will either take a breakout long trade or a pullback long trade at the neckline. The double top pattern. You have an uptrend, followed by two same highs, creating the double top pattern. This shows price failed to make a higher high, shows a loss of momentum from buyers, and signals a possible reversal of price from bullish to bearish. This reversal point here gives you your neckline. And once price breaks below the neckline with a lower low, traders will either take a breakout short trade or a pullback short trade at the neckline. The triple bottom pattern. Downtrend, three same lows, neckline. Breakout long entry here or pullback long entry here. This is a higher quality reversal pattern, as it shows sellers tried over and over and over again to push price lower but failed. The triple top pattern. Uptrend, three same highs, neckline. Breakout short entry here, or pullback short entry here. The head and shoulders pattern. You have an uptrend, left shoulder, head, which is a higher high, right shoulder, which is a lower high. This is a reversal pattern because price failed to make a higher high, showing a loss of momentum from the buyers. Neckline here, and once price breaks below the neckline, you would take a short trade, or wait for a pullback to the neckline. The inverse head and shoulders pattern. You have your downtrend, left shoulder, head, which is a lower low, right shoulder, which is a higher low. This is a reversal pattern because price failed to make a lower low, showing a loss of momentum from the sellers. Neckline here, and once price breaks above the neckline, you would take a long trade, or wait for a pullback to the neckline. The rounding bottom pattern. You have your downtrend. Price then starts losing bearish momentum, moves sideways and tight, creating a U shape. Neckline here, and once price breaks above the neckline, take a breakout long trade or a pullback long trade at the neckline. The rounding top pattern. You have your uptrend. Price then starts losing bullish momentum, moves sideways and tight, creating an upside down U shape. Neckline here, and once price breaks below the neckline, take a breakout short trade or a pullback short trade at the neckline. The megaphone pattern. You have two diverging trend lines, above and below, which makes it look like a megaphone. Once price breaks above, look for long trades. If price breaks below, look for short trades. The diamond pattern. 4 trend lines can be placed, creating a diamond shape. It looks a lot like a head and shoulders pattern, except this one can include more reversal points within the pattern. If price breaks above, it shows bullish pressure and you would look for long trades. If price breaks below, it shows bearish pressure and you would look for short trades. Now, here's the problem with manually finding patterns. 1. Many people are busy, and manually going through hundreds of charts to find patterns slows down your trading process and leads to a lot of missed opportunities. 2. Inexperience, meaning to the untrained eye, many traders might miss great patterns, or even worse, falsely identify a pattern, which leads to bad trade setups. This brings us to the sponsor of this video, Moomoo, a one-stop global trading platform trusted by over 27 million users across the world. The Moomoo platform automatically finds chart patterns for you. From within the platform, you click Pattern Finder. On this page, you'll see all the patterns we previously covered. Let's say you want to trade the double bottom pattern. Click it. Then it'll show you all the stocks where double bottoms have formed. Let's say you want to trade the bullish continuation triangle. Click it, and it'll show you all the stocks where the pattern has formed. Let's then say you want to trade the bullish continuation wedge. Click it, and again, it'll show you all the stocks where the pattern has formed. If you want to overlay indicators on top, click the Indicators tab. And on the right, you can choose whichever ones you want to use. Things like the Ichimoku, Bollinger Bands, EMAs, and so much more. If you want to zoom into one asset, just double-click it, and it'll appear full screen. You can complete your entire analysis right here. Add your indicators. You have your volume down here, and your order book here. If you want to enter trades, click Quick Trade. And you can buy and sell all from within the Moomoo platform, as it is an actual brokerage and not just for charting. You can also do this all from the Moomoo app, which provides all the same features as the desktop platform. Moomoo offers $0 commission on stocks, ETFs, and options trades, $0 contract fees for equity options, free level 2 data and real-time option chain data, and extended trading hours, so you can trade pre-market and after hours. For a limited time, when you create a funded account with Moomoo, you can get an 8.1% annual percentage yield on your deposit, as well as up to $1,000 in NVDA stock. Overall, Moomoo is not only suitable for experienced traders, but also very suitable for individuals who are just starting to learn technical analysis. You can complete the entire technical analysis process all in one place, along with low-cost trading, low fees, and ease of use. To access Moomoo, click the link below. Thank you to Moomoo for sponsoring this video. Now, these automated patterns are also available on the main charting platform we use daily. Go to Indicators, type in All Chart Patterns, and once you click it, the platform will automatically find chart patterns on the asset you are analyzing. Notice how the software has automatically drawn a rising wedge pattern. Now, you can trade directly with Moomoo on this platform. At the bottom here, click Trading Panel. Then select Moomoo and log into your account. You will then be able to buy and sell assets directly from within this platform on your Moomoo account. Let's show this again. Automatic triangle pattern drawn, and once price broke above, presented a long trade setup. Automatic bearish flag pattern drawn, and once it broke below, presented a short trade setup. Now, as price moved down, notice how the software is tracking where price currently is to create the bottom side of the larger falling wedge pattern, and it will automatically adjust itself based on how price moves next. If you want to use the exact charting platform we are using right now, the link is in the description below. Let's show this again. Automatic triple bottom pattern drawn, and once it broke above the neckline, look for long trade setups. You also had a pullback long trade setup here to the broken neckline. Within your current moving uptrend, an automatic rising wedge pattern is drawn. If price breaks the bottom of the rising wedge, you would close your previous long entries or enter new short trades. If price comes all the way down and touches the neckline and forms key price action, you would have long trade setups. Let's show this again. Your short-term downtrend here has an automatic double bottom pattern identified. Notice how the double bottom hasn't completed yet, but is still in formation. So if the pattern doesn't complete, the software will automatically remove the pattern drawing. Your long-term downtrend here has an automatic falling wedge pattern identified. If price breaks above the double bottom and above the falling wedge, this could signal a larger move to the upside due to a break of both the short-term downtrend and the long-term downtrend. You would then have multiple ways to enter. Entry through the break, entry through the pullback to the neckline of the double bottom, entry through the pullback to the top side of the falling wedge, entry through a pullback to this key level. But now, how do you know which one to choose? There's actually a formula to using patterns for entry and exits the right way. Just identifying patterns on their own isn't enough, as it can lead to a lot of false entry and exit signals. You need to know how to actually use them on an advanced level, meaning whether to enter on the break of pattern or the pullback. How to enter with precision through the lower intraday timeframes. This is always the hardest part, and most traders never figure this out. Where to place your stop loss to avoid getting taken out before price moves in your favor, but also not too far away so that you can maximize your gains. How to manage your open trade to maximize gains and limit risk. How to scale into winning trades to balloon profits. How to exit at the perfect time. If you want access to a ton of advanced content that won't ever be made available on our YouTube channel, go to wisetrade.com. Don't forget to tell us in the comments below what topics you want us to cover next. Make sure to hit the like button on this video, as it allows for our team to continue to produce more free videos on YouTube. So thanks for watching, and I'll see you in the next episode.